Good afternoon. Welcome everyone. We'll start our lesson 3. Today lesson will go through LO3 learning outcome 3. As you know me, my name is Anjum Sattar. Please, if you have any question, drop me email anjum@uuniversity.co.uk and I'll try my best to get back to you as soon as possible. So today lesson key focus will be our LO3. Before starting our lesson, I'll quickly share with you the rates, so we can look around during and I'll carry on cross reference. I already sent you the booklet, which is good too, because today lesson really focused about the capital gain and benefit in kind, which will look, some elements and how we can calculate the tax. And of course, the rates really we are using more is about 2023, 2022 Finance Act. That's, is until 31st January. But if you want to use the latest as example, so no problem, you can use 23, 24, the finance sector as well. I shared with you both, so it's good to look around. These are all the rates you have, different periods. If we go through these, and in previously I gave you all the books as well. So let's please, you can download from, can you hear me okay? Okay, we'll start then.
Yes, okay. Yeah, we can hear. Thank you. Yeah.
I can hear you as well. Thank you.
Thanks for joining. Welcome everyone.
Thank you.
Okay, so today lesson really will focus our LO3 learning outcome, which is be able to account for capital gain tax, which is Unit 5 LO3. Previous lesson we had a discussion about type of tax, which we discussed income tax, non-saving, saving, property income, personal allowance, NI, tax rate, and benefit in kind, and we discussed about ethics. Popular people chat in office. We said, to remember, we can use abbreviation, professional behavior, professional competence, and due care, confidentiality, integrity, objectivity. So today we'll look around the M, which we already discussed about the unit 12, the understanding about. And today key indicative content, what we're supposed to learn, which is capital gain tax, chargeable gain and allowable asset, chargeable gain and allowable percent, connected percent, chattels, vesting chattels rule and calculation of the chargeable gain and allowable losses and calculation of gain and losses arising from the disposable of shares and calculation of the capital gain tax and personal allowance and the bands. That will be in our discussion, which we'll go through. Okay, scale 1 to 10 always reflect, how much we know about the capital gain tax and how we can calculate, the capital gain tax. That will be the key in our discussion. And corporation, which we discussed in the previous VAT, we had a bit discussion. Of course, we're looking according to the syllabus, but these are the rates. So please always keep in mind the rates. In lesson 1, we had a discussion about the rates. And we went through, if you're earning 1 to 37,700, it's that 12,570 is no tax. Or after that, if you're earning more than that, you pay the 20% tax. And if you earn more than that, 40%. And then if you earn more than 125, 141, your personal allowance will finish and the tax rate will be 45%. So that's the key, which we need to. Okay. Yes, we have the sample assignment available on Moodle. We'll do assignment discussion next lesson. But I created a template for assignment guidance, which we'll go through. I'll share with you. But that will go through in the next lesson in detail, because that will be our assignment discussion. Okay, so so we look, these rates. And today lesson, of course, we're looking the capital gain tax. Okay, so other thing, of course, when we chart tax, so we look the residency rule. We had a discussion in the previous lesson. Property income, 100% income, finance cost, and the subject to the basis and restriction. We can look around. We had a discussion about benefit in kind, and today we'll look around the capital gain tax. So looking corporation, we look the capital gain tax in a minute. So inherent tax, which is inherently property, how when the property was transferred to the connected person, that's we'll discuss. So just we'll look around capital gain tax in a minute. Let's scroll down to show you. Yeah, so these are the rates, please, for 2022 and 3, for NSEC 2023. So capital gain for individual 6,000 annual exempt. Up to 6,000 if you have a gain is exempt. If you have more than that, the normal rate is a lower rate is 10%. If you're a lower earner from like me 37,700. 10% on capital gain. If you're a higher, it will be 20%. If the residential property rate was 18% and the higher rate is 28%. Investor relief, if you're investing in properties and all, up to the lifetime limit is, we can look around, million, and then the rate of the tax is 10%. And the business asset, disposal bad relief, which we can claim as well up to that. But that's the key, which we look today lesson and we'll apply the rates. Okay, so the connected persons, what is meant by the key? The purpose of include the spouse, civil partners, parent, grandparent, and remote, such as ancestors, children, grandchildren, and further issues, brothers, sisters, spouse, civil partners, most of these, relative as well. Therefore, it encompasses most close family members. Chargeable asset include the personal possession, which is worth of more than 6,000. We said 6,000 is exempt. It used to be 12,100, but it's now being reduced to 6,000. And the property which is not our main home, shares other than those held, in the tax-free scheme, are investment. So business assets, allowable cost in working out the chargeable gain and deduct, from allowable cost. Allowable cost, the cost which we can claim against, like such as, if there's a capital gain, or you can work written down allowance. Capital allowance which we can on the certain, which we can look around certain assets, not all assets. So what assets are exempt? So private motor car, including the vintage car, gift to the UK registered charity, some of the government securities, personal belonging, chattels where the sale proceed, the value of given are less than 6,000. 6,000 less than, like you have antiques, so those can be exempt, and the price and the betting winning, that's also exempt as well. Okay, so any question if you have, please you can ask. So cash asset held under investment saving, yes, assessment of schemes, which we can look at ISAs and all, which we can, that can be, we have to follow the rules accordingly. Okay, so first thing we have to look around, we have, our residency test. So you have to do the residency test. So what is the residency test, is about? So we have to look around the residency test. Individual in the UK less than 16 days, 46 days, and not UK resident in any of last 3 years, or 91 days are work full-time abroad. So non-resident test, that's automatically with these tests, will automatically UK resident test. Individual are automatically UK resident if in the UK 183 days in the tax year, or only home in the UK, or work full-time in the UK. Previously resident in the last 3 years. So we consider all 5 years ties. So please, these are the rules, close families in the UK. We look the domicile as well, resident, and these, the ties for the tax calculation purposes we can follow as well. So that can be sometimes a question mark, like one of, the Prime Minister wife, Rishi Sunak, that, was a question mark, and they said, no, they not break the law because the property abroad and domicile and the tax. So we can look around those issues carry on happening. So explain the difference between the chargeable and exempt. Capital gain tax, is a charge when the chargeable or disposable or chargeable asset or the chargeable person. So chargeable disposable asset is the part of disposal as a gift of the asset. However, the transfer of the asset, that is exempt, disposal. So we have to look around the inherent property and the tax, inherent and tax, if we have that. So individual pays, capital gain tax based on the chargeable gain. Chargeable gain is required three essential elements: chargeable disposal, chargeable person, and chargeable gain. Chargeable asset, the asset is come under the chargeable. So that's which we need to be. So chargeable gain is, in a British term, increase the asset value between the time it's purchased and time it's sold. The difference is your gain, and the gain 6,000 is exempt. If you have more than that, if you're a basic taxpayer, then of course, other than that, it will be the tax. Chargeable gain can be often offset, chargeable losses. If you have a losses on the property in the past within 5 years, that can be carried forward or brought forward to adjust your bill. So taxpayer payers are also allowed to reduce the chargeable gain by taking inflation into account, also known as indexation, especially in the shares, we do. Okay, so which we look, the rates, of course, the rates carry on changing. Please, in the slide, I included the latest rate, but we can follow the rates whichever year you want to use it. So some rates may be given in the slide, we prepare the slide, and then of course we look the rate this year and we can apply accordingly. The process is the same, but the rates carry on change. So please, we can look around 2023, 10%, 20%, 18%, and 28%, as I shown you in our rates table. Chargeable gain is taxed at the lower rate is 10 and are 18 because the private individual property or investment property, those we can look around, and 20 and are 18, 28% are is the investment. So these, the threshold we can look around. Person pays, personal pension contribution or make gift aid donation, that which we have to consider. So resident, yes, we have the income tax, professional responsibility of the tax advisor, capital gain tax, tax system, national insurance, and domicile inherent, tax, and the tax avoidance are the tax avoidance. So tax planning is illegal, which we can. Person disposable asset, chargeable gain, annual exempt amount, which is 6,000, the last transfer, and the tax rate which apply. The person chargeable person, individual or the company pay corporation tax on their gains, and exempt, the person, charities, assets, chargeable asset, any capital asset which they are not exempt. Exempt asset, which we mentioned, the principal private, the residence, cash, motor car, certain chattel, medals or gambling or the lotteries, that the compensation damages, shares held under ISA, which we can look around, national saving investment scheme, premier bond, gift, and qualifying, corporate bond. These are exempt. So those we need to be look around or we can advise to the client. So chattel, which is tangible movable property, vesting chattel exempt, expected useful life less than 50 years. Example, car one, boats, dishwasher, TV, race, horse, or all the animals encountered or assessment is taken as the vesting chattel. Non-vesting chattel brought and sold for 6,000 or less is exempt. Expected useful life, it can be greater than 50 years and exempt, antiques, jewelry, and painting. So any question if you have, please, you can ask. Okay, so this is the old pro forma. In this pro forma is the only the things change because this is 2019 and 20. Now we have an annual exempt amount is 6,000. So that's the key really we need to be. The rates are exactly the same. The rates not changed, but the exempt limit is changed. So capital losses can be carried forward. The gain And then we can look around the amount falling within the basic rate, how much are higher rates, so how much, like we mentioned there, 37,700. Any question, please, if you want to ask, always welcome. Okay, so what we can do, for the sake of, I shared with you the handout. Just 1 second, I'll quickly show you as well how we can. And I shared with you this booklet. I shared with you, you control F and say annual exempt, you can find the capital gain and you will find the rates there and you will find the exempt amount. And you will find a lot of examples, please. And for our assignment, we can pick examples. We can change the name, no problem. We can change amount, but the rates, of course, within that, right? That are you want to use as it is example. So if I right click on these, I can take as a images. Yes, I can snip it underneath. I can explain it. This year, this rate, and apply to this. This is the tax liability of individual. We look, the residency or chargeable person, connected person, and these, we can add, some example which we'll go through in our assignment discussion. But this document is quite useful when we do our assignment, or you can amend it, the figures yourself and redesign. Like here is the Adam, you can put someone else. For the tax year, you can say for the tax year, for the current tax year or the previous tax year, whichever you want to use it. So that's no problem. The gain amount you can, change it, any other. So that's really, we can look around and that's, good. But if you want to look around within the book, please Control F and you can say annual exam. Yes, you will see the rates there, or you can say capital gain tax, Yes, gain taxes, you will look around adjustment there. Last, there are the plenty of example there, capital gain tax, so we can look around. Yeah, so that's the way we can search it, Control F in any PDF document. So back to our slides. Okay, so please, thus we can look around for our
Hello.
sorry, if you want to ask, please, any question. Well, okay, so we can look around. Okay, so we can look around these, like here we've been given example, so we can look around MN has a chargeable gain and selling quoted shares. So we can use the index as well if you have a different shares and different. So the calculate the MN capital gain tax liability, that was this year because the rates are the same, only the exempt amount was the 6,000 this year now. So we can amend it or we can add new example. That's absolutely fine. So assuming the MN at the chargeable income, assuming the MN chargeable as the tax income. So this is the tax income came from other. So chargeable gain. So we have, chargeable gain is, we can look around here, given chargeable gain is 33,600. Exempt is 6,000, no, minus, so we can look around 10% tax on up to 37,700 if you are, and then remaining will pay 20%. So all the MN taxable gain falls within the basic tax band in this case. So we can look around at this, assume MN has the taxable income. Yes, that's a taxable income. So we can minus, so we can separate the gain. So that's, which we can look around from 37,500, the remaining will pay the tax. So then we look, the first. So we can look around 10%, then after is 20%. So we can look around in our now and the previously. So we have that example is a different finance year. It doesn't matter, but you can apply to the new rate. Any question if you have, please, you feel free to ask. Okay, the part of disposal, sometimes property half we are selling, the proportion of the property we sell. So we use normally formula allowable cost as a whole of the asset times A is the proceed of the part of how much proceed you have, market value of the remaining part, how much we have A plus B, and asset loss or destroy at the any insurance proceed, those we can look around compensation we received at the market value in 12 months. That's, we can make adjustment accordingly, and that's, which we need to, for the calculation purpose, we can use. So what we can do, the chattels we said earlier, chattel is less than 6,000, exam more than 6,000. Uh, uh, we can, and the losses we can transfer. So we can claim for 6,000 the year which we are. If we have a loss of the previous year, normal calculation, but the gain is restricted to, so we can look around these, the gross proceed which we have minus 6,000. So if they greater than or indeed, so we can do our working accordingly and to calculate the tax liability. Yes, sure, please do. So you can send me, I can give you feedback and we can go through accordingly. So, okay, anyone want to send me, you can. So connected person, we can look around the grandparents, spouse, sisters, and these are all the connected persons. So those are, we can consider for the tax purposes, connected person for inherent tax, capital gain tax, as well. So we are gaining on those assets which will happen. So this is the one of other example which I'll relate to the now rate. Of course, which I mentioned earlier, the rates is now, the rates are the same, but the exempt limit is 6,000. So we have a gain there 8,800. Okay, there is no as such deadline, but we'll try after 2 weeks when assignment discussion. So that's, which we can look around in when we'll do the assignment discussion next week. After that, normally we expect, 2 weeks, to submit your assignment. Okay, so we can look around these. We have, and then we have a total gain there. And Douglas capital gain tax liability, which we can, that's, we'll go through. We said now is 6,000 instead. So you have to minus 6 instead of 12, 39,500. So remaining is 12 because the previously it was 12. So now if we do current year, so we do 6 because you have to look around the rate. Other gains which we have, so total gain. So we can look around because now if your income is more than 37,007, it previously was 500, now it's 37,700. So because that was the investment properties, yes, investment purposes. So you have, 18% the normal rate on this one, which is capital gain of others, yes, which is individually you have the gain instead of business. So 10,000, 37,500 minus 27,500, then remaining is 10% up to 37, and then remaining if you have more than 37,700, that goes the higher rate, which is 20%, and we can find the total tax liability, how much we have. Yes, so all these are capital gain tax which we have to pay. 4,950 plus 1,000, 5,950 plus 1,760, add them all. So that will be our total tax liability. So we can calculate, all annual exempt is set again that residential property capital gain tax liability could alternately be calculated, which we can 10%, 18,800, and 37 minus, 18,800, then 18%. And we can find, total tax liability according to the investment. That's, which we can look around few examples. So please, in our document, we have a lot of examples. I refer of, so we can pick example for, because you're not really doing your exam, you're doing your assignment, and assignment examples we can pick, and we can embed those and applying the new rates. So losses, of course, we have a 5-year rule. It can be set up capital gain, and of course, we can reduce our losses and carry forward. So let's, we look the example in this case now. So we have examples 2019 and 20. At that time was NIM has chargeable gain 18,000 and capital losses 15,000. So the losses is 15,800. So 18,000 minus 15,800, the capital gain left, 2. So we minus annual exempt amount, because up to 12,000 was annual exempt. That was the previous year loss. So the tax liability will be 0. So no tax on capital gain, because the losses can be carried forward. So that's quite good way to save by law the tax. So after deducting annual exempt is only 6,000 brought forward, capital losses can be set off. So can be now, which we can the next year, and now the capital losses carry forward because the gain is only 6,000. The remaining we can collect. Please, I included this link, and I'll update the link, which I sent you now, the latest year one. So you can find ACCA Finance Act 2023, and that can be used, for. And I included few videos, please. And if you on the open tuition, please, you can look around tax F6 exam, and that's, you can download. I gave you the handout, but if you want each chapter separate video, you can as well. But our videos embedded, according to our assessment criteria, LOs, which we divide it, and then we'll do assignment. We can refer examples from our slides, and we can do accordingly. And you can say in this your assignment which finance act you are following. So please, these are all the examples, and the links are included. If you have any question, please you can ask. So today we cover LO3, and that was about the capital gain, which we discussed about connected person, and we discussed about the limits on 6,000 is exempt, and then we discussed about rate 10 and 18, and we discussed about is it. So please always follow the rates table. That's help you to prepare. So that's all today from my end. If anyone any question particular, please you always ask it. Always welcome. Any question from anyone?
No, thank you.
Thank you. So if no question, we'll keep up to here. And the next lesson we'll do the assignment discussion. We cover our all 3 learning outcome, and that's which we look around the in the next lesson. Our assignment discussion, that's which we go through during our next lesson, and we'll do the assignment discussion. So next lesson will be very crucial, please, in terms of your assignment, because the assessment criteria is only assignment. And thanks for attending, and have a lovely bit weekend left, and hope we'll speak you all during our next lesson, and we'll do the assignment discussion.
Thank you very much. You too.
You have a nice time. Thank you. Bye-bye.
Thanks.
Thank
Bye.
you.
Thank you. Bye-bye.
Bye-bye.
Thank you, sir.
Thank you. Many
নমস্কার, আমি